Bitcoin trading just below $107,000, propped up by optimism over the pro-crypto incoming Trump administration and selections. But buying and selling crypto can have a different effect on your taxes than standard stocks. And here to explain and set you up for tax season, we've got Andrew Gordon, partner at Gordon Law, good friend of the show. Andrew, good to see you here. So just set this up for us. How do you have to handle crypto investments on your taxes?
Yeah, Brad, crypto investing is unlike investing in almost any other traditional stock or security. When you're investing in crypto, typically there are no tax reports that are done for you. When you invest in stocks on a platform like Robinhood or use a broker like Morgan Stanley, they issue you a tax report at the end of the year. And that tax report has all the information you need to file your taxes. It has your gains, your losses, includes your cost basis and your sales price. But with crypto, this form or this method of reporting does not yet exist. In fact, it's up to the individual crypto trader to report on your taxes. And if you don't report properly, you can have severe penalties or even worse. And it gets even more complex if you trade on multiple exchanges, because then you have to actually trace your cost basis or your movement between one exchange to another.
And so a lot of people are talking about how to make donations at this time of year. Talk to me about donating crypto versus donating hard cash.
Yeah, so this is a great strategy for those that have appreciated crypto. And for those holding Bitcoin, that's nearly everyone with Bitcoin at all-time highs. And typically, if you sell crypto or you sell any asset and it's appreciated, you're going to have a capital gain. And you'll be taxed on this capital gain at your tax rates, either short-term or long-term. And then if you take that cash and donate to a charity, you'll have a deduction. But the deduction for the donation will offset the gains, and you'll be far less better off than if you just were able to donate the actual asset itself. And so you can donate appreciated crypto directly to a registered charity. And by doing so, you get a deduction for the fair market value without having to sell it. So if you do have appreciated crypto, this is a great strategy that you might want to consider before year end. It can significantly reduce your taxes without having those capital gains.
There are some new crypto regulations that are expected to take effect next year. What do investors need to know?
So I talked about how there hasn't been tax reporting, and this has been the way it has been for the last 10 years. However, only a few months ago, the IRS or the Department of Treasury issued new regulations requiring brokers to start reporting to the IRS and to taxpayers using a new form, a Form 1099-DA. And so this form is going to be sent by exchanges to both the IRS and to taxpayers, and will hopefully have all of the information that is needed to report. But at first, there's going to be significant changes. And the first change is by wallet accounting rules. Most people have been using a global basis of accounting for their crypto. But going forward in 2025, under these new broker regulations, you'll have to start accounting for your crypto on a by wallet basis.
So how can crypto investors prepare today as we round out, of course, what's going to fall under the 2024 reporting for some of those 2025 regulations?
Well, the first thing is, if you're hearing all of this and you haven't reported your crypto or haven't reported fully, now is the time to do so. The IRS is going to have a fire hose of information and are going to likely use this to increase enforcement, increase audits, sending out notices or penalties. So if you haven't done your accounting, now is the time. But once you've done your accounting, the Treasury regulations have released a new safe harbor rule that allows you to allocate your cost basis. Or if you've bought crypto over a long period of time or even a short period of time, and there's different prices or values for that crypto, by year end, you can allocate that cost basis to the crypto you're still holding. Now, that may require that you complete your accounting, and there's things that you need to do by the end of the year. So if you have a tax professional, now would be a great time to talk to them about your crypto accounting.
Andrew Gordon, great to see you. Thanks so much for taking the time.
Thank you, Brad.